Good morning, everyone. Happy Eclipse Day. Hope everyone gets an opportunity to view that eclipse today. It is August 21st, 2017, and your morning market preparation video. So today, with that eclipse going on out there, we could see a little bit of a light volume choppy action because I kind of suspect there's going to be a lot of folks out watching it today. But other than that, let's talk about what the market has done here. We have got some real technical damage that we're dealing with in the market. First off, the diamonds on Friday gave up the trend. This trend has been in place for some time now. You can see since late April, this trend has been in play. And we really gave that up on Friday with some follow-through selling to that big sell-off on Thursday. So we have some damage here. Now, the good part about the diamonds is that it held above the 50-day moving average. We went down there and tested it, but held above it. So we're really at a perfect place for a potential bounce or a little bit of a rally back. But let's not get too excited about that because this technical damage is much more severe than we've seen here in recent past. So, any rally back, to test this up in here could easily serve as the resistance for the next wave down. We have to recognize the fact that we are now got two signals here of highs, and we've actually set a downtrend. Downtrends are made by lower highs followed by lower lows, and that's certainly what's going on here in the diamonds. So technical damage here in the diamonds to be aware of. It can be corrected. Don't think that I'm suggesting that we're going to fall off a cliff here. It can be corrected, but I will tell you that it is significant enough to be cautious. Okay. Taking a look at the SPY is in a worse situation here, in my opinion. Now, as you can see, I've got a support level drawn on this chart right through this area here. That support level so far has held. But here's the problem that we've got with the SPY, and that is, again, we have a high, a lower high, and a lower high, and all of those are showing lower lows. Okay, so we have a downtrend in play here. We've broken through the 50-day moving average to the downside significantly. And notice that the shorter term moving averages, the 34 EMA, the 8 EMA, are all very close to crossing down below the 50. So any bounce back, any rally back, and I suspect we will get some kind of a relief rally here in the next couple of days, a relief rally back into here is only rallying back to a significant resistance point that could easily give us an additional failure to the downside. Now, don't be surprised if this rallies back. I don't want somebody sending me an email saying, well, see, it just got right back above that resistance. Remember, anything below this downtrend should be suspect of a potential failure. It doesn't have to go just right back to resistance or just right back to the moving averages. We have seen several times in history where we cross right back over only to find that's where we find the sellers. So be careful here. This is not a reason, in my opinion, this is not a time to blindly be buying the dip. Okay? There's nothing here suggesting that we should just be racing back into the market. The Qs happen to be in just a slightly better situation. Holding, we did close below the 50. But we ended up holding above this low on the 10th. Just barely. We went down and tested it, bounced off of it for the close. But we do have some major issues here to deal with. First, again, 3 lower highs. Okay. So it only has to move slightly lower to confirm this downtrend. 3 lower highs unable to break through. And we've got some big resistance levels that we're going to have to worry about on any rally back. Any rally back up in here could meet with resistance at any one of these places and could create some really bad selling. You know, like I always say, it's not that first wave down, it's not that first move down that's really the one to worry about. It's after that rally back and a failure to make a new high that we really get the selling coming in. So watch that closely and make sure we're not being overly confident in trying to pick a bottom here. I know the market has shown us over and over and over here the last few years to just jump in and buy that bottom or buy that dip. This one seems to be a little bit different, and I would be a little bit cautious here. If I did decide to trade, I would trade small, and I would definitely make sure I waited for a good defensible position before I jumped in. A good technically defensible position. Okay. Now that IWM, this guy is just sick. We do have some hope here. Not all hope is lost. We have a significant level of support right through here. And we're down here testing in that area. But we have failed the 50. We have failed through the 200. Notice if I zoom this back up, 34 EMA, the 20 EMA, the 8 EMA have all dropped below the 50-day moving average. So any rally back, we would have to watch for a potential of a failure pattern. Here's our downtrend, pretty sharp downtrend. Any rally back up into here, we would want to watch for potential failure. And I would even move that all the way back up into here. A rally all the way back up into here could easily create that next failure. So watch that closely. Remember, technically correct patterns, what we want to get into, anytime we trade, we want to see that pattern where the stock has rallied back up, held a higher low, and then shows us a buy signal. This is our first evidence. If we've been moving down, this is our first evidence right here of the beginning of an uptrend. It's right there. Don't chase this. Don't chase this because there's no proof of holding support yet. This is where we get our first proof that support is being held. Okay? Let's take a look at the VIX. The VIX rallying back up here on Thursday didn't do a whole lot of rallying here on Friday. We pushed up and then pulled back. But remember what I've been talking about. Anytime we get the opportunity that we're going to hold this downtrend line, okay, if we hold that downtrend line and fire off of there as support, look out below. We could have some real trouble ahead. The fact that we held here on Friday, I think, is significant. And I didn't make up this line. This line has been have been drawn for a long period of time. If I go back even further, go to like a 3-day chart, you can see how long this downtrend has been in play. And getting back above here would be significant, I think. At the bare minimum, just notice that our volatility has raised significantly, so we can expect bigger price swings, higher volatility, and price action as we move forward over the next few days. So watch that closely. Today on the economic calendar, there's really nothing to worry about. We have essentially an unimportant report with the Chicago Fed national activity report. It's not a market moving report. And then we got a couple of bond announcements. On the earnings side, we have over 50 companies reporting earnings today. None of them look to be the kind of one of those companies that could really move the market, not one of those newsy companies. So not much to worry about there. So the market will kind of be left to its own devices, and I suspect we're going to get a little bit of an oversold bounce. If I look at a chart, it's called, whoops, wrong chart. If I look at a chart, it's called T2122. T2122 gives us this range, and you can see this is a bullish or a bearish reversal zone when prices get up here. This is a bullish reversal zone when prices get down here. So I think we're just short-term oversold, and we can remain oversold for a period of time. Don't make the mistake that this absolutely means we have to rally. But I do suspect we are going to get some kind of a bounce here in the next day or two. But I would not view that as a reason to just blindly race into the market. Okay. This technical damage has got some work to do. There's going to be a lot of repair work that has to happen, and confidence, will have to be rebuilt. And so, just be slow to act. Be careful. Be cautious. Hey, for everyone, Right Way Options will be closed today, as I've been invited out to with a bunch of astronomical scientists to play around and get my nerd on with all the scientists watching the eclipse today. And I think it's going to be a lot of fun. So Right Way Options will not be open today. And I honestly wouldn't be looking for any trades today anyway until I see the market starting to show some good signs of recovery. So everyone, be careful, be cautious, protect yourself. No need to rush. The market will be here tomorrow and the day after that. So wait and watch for your best entry. There's no need to guess. There's no need to speculate. If we wait for the right trades, the trades will come to us, and we can trade effectively without all the risk. All right, everyone, have a great day. I wish you awesome profits, and I will talk to you all soon. Take care now.